NIO stock just received two completely different signals at the exact same time. One report says the stock may already be trading slightly above its estimated intrinsic value. But at the very same moment, NIO's newest mass-market SUV crossed a milestone that very few EV companies have ever achieved. So which story matters more? That's exactly what we're breaking down today. If you enjoy fast, data-driven stock analysis that cuts through the headlines and focuses on what actually moves stocks, make sure you're subscribed to the Daily Squeeze. We cover the biggest market-moving stories every day, so you never miss the next major catalyst. Now here's what just happened. Fresh corporate disclosures confirm that NIO's ONVO L60 has officially delivered its 100,000th vehicle. But the speed at which it happened is what has investors paying attention. The refreshed version of the L60 only launched in June, bringing updated technology and deeper integration with NIO's premium platform architecture. According to the latest operational data, that refreshed model became one of the biggest drivers behind ONVO's explosive 83.5% year-over-year delivery growth in June. That's a remarkable acceleration in one of the most competitive EV markets in the world. And it suggests that NIO's strategy of expanding beyond its premium lineup is beginning to gain real traction. For years, investors viewed NIO primarily as a luxury EV manufacturer. But today, the company looks very different. Instead of relying on a single premium brand, NIO is building a three-brand ecosystem designed to compete across multiple price points. The flagship NIO brand targets the premium luxury segment. ONVO focuses on families and mainstream buyers. And Firefly is aimed at budget-conscious customers, entering the EV market for the first time. That diversified approach could become increasingly important as competition intensifies across China's electric vehicle industry. Now let's go back to the ONVO L60. Reaching 100,000 cumulative deliveries isn't just a marketing milestone. It demonstrates that the vehicle has established meaningful demand in the mid-size electric SUV category. Supporters of the company argue this gives NIO another growth engine outside its flagship vehicles. Of course, competition remains intense. Tesla, Li Auto, XPeng, BYD, and several other manufacturers continue fighting aggressively for market share, so it's too early to declare any single winner. But the latest delivery milestone suggests ONVO has become a serious participant in that race. And there's another reason investors are watching closely. As production volumes increase, manufacturing efficiency can improve. Higher scale often creates opportunities to lower production costs, improve supply chain utilization, and strengthen margins over time. Those benefits don't happen automatically, but reaching larger production milestones is often viewed as an important step toward that goal. While many investors were focused on the delivery numbers, another interesting story quietly emerged. Firefly, NIO's newest entry-level brand, launched a limited edition version of its vehicle called the Pixel Player. Only 333 units were made available, and according to company data, the entire production run sold out in just 8 hours. Now it's important to keep that number in perspective. Selling 333 vehicles doesn't move the financial needle for a company the size of NIO. But the speed of the sellout is what caught investors' attention. Fast sellouts can indicate strong customer interest, especially for a newly launched brand that is still building awareness. The Pixel Player was offered at a highly competitive price, with an even lower entry point available through NIO's battery-as-a-service program. That pricing strategy appears designed to attract first-time EV buyers, while introducing more consumers into NIO's broader ecosystem. And that's where the bigger picture starts coming together. Instead of competing in only one segment of the market, NIO now has products reaching premium luxury buyers, mainstream family customers, and entry-level consumers. Few automakers have attempted to build that kind of three-tier strategy in such a short period of time. Whether it ultimately succeeds remains to be seen. But the early demand signals are certainly getting investors' attention. However, despite all of these encouraging operational updates, one question still remains. If deliveries are growing, if new models are gaining traction, and if demand appears healthy, why are some analysts still arguing that NIO stock may already be fully valued? That's where the valuation story becomes much more interesting.